Imagine for a second that you are an 80-year-old woman.
Okay.
You have just finished a grueling, like 4-hour dialysis treatment. You are physically exhausted. Your blood pressure is fluctuating all over the place. And honestly, all you want is to be in your own bed.
Right, which is completely understandable.
Exactly. So you wait in the clinic lobby for the medical transport van that your state insurance provided, and 1 hour passes. Then 2.
Oh, wow.
Yeah. The front desk staff starts turning off the lights because the clinic is closing, and you are still sitting there waiting for a ride that, frankly, might not even show up.
It is, it's just a heartbreaking scenario.
Yeah.
The crazy thing is, it plays out every single day across the country.
Really?
That often.
Oh, yeah. I mean, we spend so much energy and money innovating the actual medical care happening inside the clinic, right? But then we completely ignore the massive logistical nightmare of just getting the patient through the front door.
And that broken logistical system is exactly why we are jumping into today's deep dive. We are unpacking the world of non-emergency medical transportation, commonly known as NEMT.
Right, NEMT. But we aren't just looking at the standard system today. We are focusing on a booming, almost underground premium economy that has sprung up to fix this exact problem. It's called private pay, NEMT.
It's a huge shift in the industry.
It really is. So we've pulled together a massive stack of data for this deep dive. We're looking at industry coaching frameworks, medical billing manuals, fleet logistics data, and, ground-level business strategies.
It's quite the pile of sources.
Seriously. Our goal today is to figure out what private pay NEMT actually is, who is desperately relying on it, and to answer a really startling question, which is, why aren't massive safety nets like Medicaid and Medicare covering these rides?
Yeah, that is the multi-billion-dollar question right there, because, when families suddenly find themselves thrust into a medical crisis, they just naturally assume their lifelong insurance will handle the logistics.
Right, like I've paid into this my whole life.
Exactly. So finding out it doesn't is a massive shock.
A huge shock. And for you listening right now, whether you are currently trying to manage care for an aging parent, or maybe you're navigating the healthcare system yourself, or you're just curious about how this hidden medical economy actually functions, this deep dive is going to fundamentally change how you view a simple ride to the doctor.
It definitely will.
So to understand why people are paying out of pocket for a premium service, I feel like we really need to look at the traditional system that is driving them away first.
Yeah, to do that, we have to look at the traditional backbone of the NEMT industry, which is Medicaid.
Okay.
Because Medicaid is a federal-state partnership aimed at low-income individuals, it actually has a statutory requirement to ensure beneficiaries have transportation to their medical appointments.
Oh, so they are legally required to provide the ride.
They are, but states have to manage millions of these rides, so they outsource the logistics. They typically use a third-party brokerage model.
So the state basically hands a giant pool of money to a corporate broker, and that broker acts as a middleman.
Yeah, exactly. They dispatch the trips to the local van companies.
Okay, that makes sense on paper.
It does, but here is where the breakdown happens. Medicaid is focused entirely on cost containment. So the state pays the broker a fixed rate per patient, which is known as a capitation rate.
Right.
Now, the broker wants to keep as much of that money as possible, to make a profit. So when they turn around and hire the local transportation companies to actually drive the vans, they squeeze those local providers on the reimbursement rates.
Which forces the local transportation company into a terrible position. Like, if they're only getting paid pennies on the dollar for a trip, how do they even survive?
Well, the only mathematical way they can keep their doors open is by playing a volume game.
Meaning they just cram as many people in as possible.
Exactly. They have to multi-load the vehicles. The algorithm routing these vans is basically designed to pack 3, 4, or even 5 patients into the same vehicle, and then it just zigzags across the county.
Oh, geez. So our hypothetical 80-year-old dialysis patient from earlier, she isn't just waiting because the driver is lazy.
No, not at all. She's waiting because her driver was routed to pick up a methadone clinic patient, and then a physical therapy patient, and then a dental patient before finally getting to her.
That sounds like a total nightmare. It creates a system defined by long wait times, missed appointments, and just a complete lack of scheduling flexibility.
Yeah, it's incredibly chaotic.
So basically, the state is treating these medically fragile patients like they're riding a rigid, severely overcrowded public bus route.
That is a perfect way to put it.
You are entirely at the mercy of their algorithm, their delays, and their routing. which I guess creates the perfect vacuum for private pay NEMT to step in.
It does. Private pay is essentially the on-demand premium town car alternative to that public bus.
Okay, I like that analogy.
Yeah.
So what exactly defines private pay?
The defining feature is right in the name, really. It means bypassing the system entirely. No insurance companies, no government brokers taking a cut.
You just pay directly.
Yep. The client or their family pays directly out of pocket. And because they remove that bureaucratic middleman, the entire value proposition changes. It shifts from cost containment to patient dignity.
Okay, but we are not just talking about calling a standard Uber or Lyft, right? Because the data emphasizes that private pay NEMT is a highly specialized medical service.
Oh, absolutely. These aren't regular cars. These are ADA compliant vehicles.
Right.
They have, hydraulic wheelchair lifts, 4-point floor tie downs, or even stretcher mechanisms for patients who need to remain lying down but don't need a full emergency ambulance.
That makes a huge difference. And the drivers are different too, right?
The personnel requirement is drastically different. A rideshare driver stops at the curb and expects you to just, get into their Camry. Private pay NEMT operates on a door-through-door model.
Door-through-door, meaning what exactly?
Meaning these are CPR-certified professionals who will literally walk into the patient's bedroom, help transfer them into a wheelchair, safely lock them into the transport van, drive them to the clinic, and then wheel them directly into the doctor's waiting room.
Wow.
And often they even stay on site until the appointment is over.
That wait on-site feature is huge. I mean, if I'm paying out of pocket, I can dictate that the driver sits in the parking lot, so the very second my mom finishes her appointment, she goes straight home.
Exactly. No waiting around in the dark lobby.
But that level of concierge service does not come cheap, which leads to the massive central question of this deep dive.
Let's hear it.
If you're dropping that kind of money to guarantee a ride, who is actually footing that bill? Because the first thing that comes to mind is surely insurance covers this for the people who need it most.
You would definitely think so. But the demographics of the private pay client tell a very different story.
Who are they?
Well, we are looking at a highly diverse group, but they generally fall into a few specific categories. You have seniors dealing with mobility loss. You have post-surgery patients who require incredibly gentle handling over speed bumps.
Right. Something a standard rideshare simply won't accommodate.
Yeah. Exactly. And then you see a massive surge in dialysis and oncology patients.
That makes sense because chemotherapy and dialysis just physically wreck you. You cannot endure the physical toll of a multi-loaded Medicaid van after those treatments.
No, your body just can't handle it. But there's another demographic that stood out in the industry data, and that's the adult children.
The caregivers.
Yes. A massive portion of private pay NEMT clients aren't the patients at all. They are the working-age children of the patients.
Like someone trying to manage their parents' care from afar.
Exactly. Imagine you are a 40-year-old professional living in Chicago, right? And your dad lives in Ohio and needs to get to his cardiologist.
You can't just take Tuesday off to drive.
No, you can't. So you pay an NEMT company for that door-through-door service. You are essentially buying peace of mind.
And some of these services even have tech features for that, right?
Yeah, many of these private pay fleets use live GPS tracking. So the daughter in Chicago can watch a dot on her phone and know exactly when her dad makes it to his doctor.
Which is an incredible service. But again, I keep getting hung up on the funding. Why are they paying for this out of pocket? What about Medicaid? Why isn't Medicaid paying for the dad in Ohio?
This is where we hit the middle income trap.
The middle income trap.
Yeah. A huge portion of these private pay clients simply make too much money to meet Medicaid's incredibly strict financial poverty requirements.
Oh, I see.
They might have a modest pension or like a little bit of retirement savings, which instantly disqualifies them from state-funded rides. But physically, they can't drive themselves, so they fall right into the gap.
Okay, so if they aren't on Medicaid, they are likely seniors, which means they are on Medicare.
Yeah.
But wait, if you have been paying into Medicare your entire working life, like at every single paycheck, why is a medically necessary ride to a cancer center treated like an out-of-pocket luxury upgrade?
Right.
Why doesn't original Medicare just cover the ride?
It is arguably the single most confusing and frustrating point for patients navigating this system. To put it plainly, original Medicare, which is Part A for hospitals and Part B for outpatient care, operates on a philosophy of acute crisis.
Acute crisis. not chronic logistics.
Exactly. It's not for chronic logistical management. They will absolutely cover a $2,000 emergency ambulance if you are having a heart attack.
Right.
But a scheduled routine wheelchair van to get you to your neurologist, Medicare will not pay a single cent for it.
That is just wild to me. The system will pay for the incredibly expensive emergency room visit when your health collapses, but it won't pay the $50 to get you to the preventative checkup that would have stopped the collapse in the first place.
It's a massive structural flaw in the safety net. Medicare views transportation strictly as an access issue, not a comfort or reliability issue. Wow.
And since they don't cover non-emergency transit at all under Part A or B, the burden falls entirely on the patient.
But wait, I see commercials all the time for Medicare Advantage plans, Part C.
Oh, the ones shouting about free rides to the doctor.
Yes.
Are those not solving the problem?
They are trying to, but honestly, it's often an illusion of coverage. About a third of Medicare Advantage plans have started offering some form of transportation benefit, but when you read the fine print, the restrictions are severe.
What kind of restrictions?
These plans typically enforce strict ride caps. We're talking maybe 12 or 20 one-way trips for the entire year.
For the whole year. If you were on dialysis 3 times a week, you burn through your annual limit in a month.
Exactly. And the scheduling rules for those Advantage plans are just as bad as the Medicaid brokers. You usually have to book your rides 72 hours in advance.
That makes no sense for real life. If your doctor calls and says, hey, we had a cancellation come in tomorrow, you can't use your insurance ride because you didn't give them 3 days' notice.
Exactly the problem. The rigidity of the insurance model makes it practically useless for the fluid reality of actual healthcare.
Okay, so what about other safety nets? People often buy long-term care insurance specifically to avoid these out-of-pocket costs. Or what about veterans utilizing VA benefits?
Those programs do offer transportation funding, but they come with heavy bureaucratic friction. Let's look at long-term care insurance first.
Okay.
Most of these policies have what is called an elimination period. This is essentially a waiting period, often 30 to 90 days, before the policy actually starts paying out.
Wait, 90 days. If your mom falls and breaks her hip, she needs transport to rehab this week. You cannot wait 90 days for the insurance to kick in.
You really can't, so you have to pay out of pocket to cover that gap anyway.
And the VA system.
Well, the VA has excellent programs like the Homemaker and Home Health Aid Care program, which can cover transit, but it requires clinical assessments, pre-approvals, and the transport company must have an established complex contract with the VA network.
Which takes time.
A lot of time.
Yeah.
So what does a family do when they are staring down a critical oncology appointment tomorrow morning and the paperwork is still pending?
I guess they pull out their credit card. They bypass the red tape entirely and pay the private pay rate because they simply cannot afford to wait.
Exactly.
Which brings us to a really fascinating shift. Since there is this massive gap in insurance coverage, there is a booming market for entrepreneurs. Let's look at the business side of this ecosystem.
Let's do it.
Because if you read through the NEMT business guides and coaching frameworks, fleet owners are desperately trying to pivot away from the Medicaid brokers to attract these private pay clients.
And the reason they're pivoting comes down to the brutal reality of their profit margins. Earlier, we mentioned that brokers squeeze the local providers, right?
Right.
To put numbers to that, industry data shows that Medicaid broker trips often pay a dismal $8 to $14 per one-way trip in many markets.
Wait, $14 for a specialized medical transport with a commercial vehicle? That doesn't even cover the gas and the driver's hourly wage, let alone the vehicle wear and tear.
It doesn't, and that's why the service is so poor under that model. The providers are literally starving. Now, compare that $8 to the financial upside of private pay.
Okay, what are the numbers there?
A private pay wheelchair transport might bill at a base rate of $50 plus $3 or $4 per mile. A single trip can easily yield $80 to $150.
Wow, that is a massive difference.
But the revenue per trip is only half the story. Private pay also solves the concept of deadhead miles.
Deadhead miles. Let's unpack that because it's a huge operational cost that people outside the transportation industry probably don't think about.
Yeah, a deadhead mile is when the driver has to travel empty, without a passenger in the vehicle. Say you drop a patient off at a rural specialty clinic 30 miles out of town. The Medicaid broker will only pay you for the 30 miles the patient was actually sitting in the seat. They will not pay you a dime for the 30 miles you have to drive back to your home base empty.
So you are burning fuel and paying your driver's hourly wage for an hour of zero revenue.
Exactly. But a private pay invoice can account for that. You can build the deadhead return trip into the structured package price, so the business isn't taking a loss just to service a rural area.
That is huge.
And you can charge premiums for off-peak hours. Like, if a hospital needs to discharge a patient at 8 p.m. on a Sunday, the brokers are often closed or unhelpful. A private NEMT fleet can charge a weekend premium and get that patient home.
Which is great for revenue, obviously. But we also have to talk about cash flow. Because taking a Medicaid trip doesn't just mean you get paid poorly. I mean, you get paid painfully slowly.
Oh, the billing nightmare.
Yeah. Looking at the medical software manuals we pulled, the amount of administrative friction just to collect that $14 broker fee is staggering.
It really requires navigating a labyrinth of complex medical coding. The provider has to know exactly what kind of trip they performed. Was it an A0428 code for basic life support? Or maybe a T2003 code, which is the standard identifier for a non-emergency trip.
That sounds incredibly tedious.
It is. And the driver has to maintain flawless digital trip logs, exact mileage tracking, and secure patient signatures for every single leg of the trip.
And then they take all that data, bundle it up, and submit it through an electronic clearinghouse, and then they wait.
They wait anywhere from 30 to 60 days to receive reimbursement via electronic funds transfer.
2 months.
Yeah. And that is assuming the claim was perfect. If the doctor's national provider identifier, their MPI number, has a single typo, the clearinghouse denies the claim.
Oh, man.
You have to fix it, resubmit it, and the 60-day clock starts all over again.
Try running a small business where you are buying fuel and paying your employees today, but you literally don't see the cash for 2 months. Contrast that with the private pay model. The family books the ride, the driver completes the trip, and they swipe a credit card or pay an invoice via a secure link right then and there. Instant cash flow.
Exactly. The shift from Medicaid brokers to private pay is essentially the difference between working for a giant gig economy delivery app versus opening an independent boutique concierge firm.
That's a great comparison.
With the broker, an algorithm dictates your tiny wage, you have no control over the chaotic route, and you are just a replaceable vendor. But with private pay, you set your own rates, you define your own value, and your clients specifically choose you based on your reputation.
But that means they actually have to build a reputation, right? The coaching frameworks make it very clear that an NEMT provider can't just buy a wheelchair van, slap a magnet on the door, and expect private pay clients to start throwing cash at them.
Precisely. When you ditch the broker, you lose that automatic feed of daily trips. You have to earn every single client.
So it requires a massive shift into proactive marketing.
Yes. These business owners have to build professional, highly optimized websites. When a panicked daughter in Chicago searches for wheelchair transport near me in Ohio, that local company's SEO needs to put them at the top of Google.
They also have to target the high-value facilities directly, don't they? Like building relationships with the discharge planners at local hospitals or the social workers at dialysis clinics.
Oh, absolutely, because those are the people who will hand a private pay brochure to a family who's struggling with transit.
Right.
And the most successful fleets, they change how they sell the service. They don't just offer a quote for a ride. A quote is just a number that a client will try to negotiate down.
So what do they do instead?
They offer structured service packages.
Mm-hmm.
They present a fully mapped out solution like, for this flat rate, we provide an ADA compliant vehicle, a CPR trained driver who will wait on site for 2 hours, and love GPS tracking for the family.
They're selling the whole solution, not just the miles driven. And honestly, they kind of have to run it this way to survive. The capital investment here is wild.
It really is.
An entrepreneur might spend $45,000 to $65,000 just to purchase and insure a single, properly equipped wheelchair van. To pay off that kind of heavy equipment debt, they absolutely rely on the high-margin instant cash flow of private pay clients.
And by pursuing those higher margins, these entrepreneurs are inadvertently reshaping the entire industry.
How so?
Well, by stepping away from the volume-heavy broker model, they are elevating NEMT from a basic, disorganized transportation mindset to a true healthcare logistics model.
I see.
It creates a functional, sustainable business for the owner, and it restores reliability and dignity to the patient's routine.
So, bringing all of this together, we are looking at a massive, glaring gap in the healthcare system. You have Medicare, which largely ignores routine transportation entirely, leaving seniors stranded. Then you have Medicaid, which provides the rides, but filters them through a rigid, lowest bidder broker system that leaves patients waiting hours on the curb and starves the local drivers.
That's the reality of it.
And private pay NEMT has emerged as the premium alternative. It provides guaranteed, door-through-door reliability for patients and their families while giving business owners a sustainable escape hatch from low-paying government contracts.
It is a critical shift in how we approach care. It acknowledges that the journey to the clinic is just as medically significant as the treatment itself. Because honestly, if you can't get to the dialysis machine safely, the technology of the machine doesn't even matter.
Absolutely.
Yeah.
And for you listening, understanding that this dual ecosystem exists is vital. If you are exploring a new business venture, NEMT is a space desperate for high-quality operators. And if you are a family member trying to ensure an aging parent gets to a critical appointment, knowing that private pay exists as a viable alternative to the insurance headache is incredibly empowering. It means the overcrowded public bus isn't the only way to get there. You can take back control of your family's healthcare logistics.
But as this private pay sector continues to boom, I think it forces us to look at the broader implications for the healthcare system as a whole.
Yeah, that's true.
We've mapped out exactly why private pay is a phenomenal solution for families who have the financial means to bypass the red tape.
Right. But what about the families who don't?
That is the lingering challenge. If private pay NEMT continues to grow as the absolute gold standard for reliable, safe, on-time access to medical care, what does this mean for the future of health equity?
That's a great point.
Are we quietly shifting toward a two-tiered system? One where patients who can afford to pay out of pocket are guaranteed to make it to their life-saving appointments with dignity, while everyone relying on the public safety net is left waiting on a cold curb for a van that might never arrive.
That is a heavy, structural question that the industry is going to have to reckon with. Because if getting to the doctor shouldn't be more stressful than the appointment itself, we really need to look hard at who is being spared that stress and who is still being forced to run a logistical marathon just to get to the starting line. Something to think about the next time you see one of those specialized transport vans out on the road. Thanks for joining us on this deep dive.